Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Well, if you're a meat lover, brace for impact. You and the Fed are in a huge amount of trouble. What are we talking about? Well, we're going to get into it in this video, so let's dive in.
Trade Genius.
Hey guys, I want to tell you something that we do that really will change the way in which you look at trading and also absolutely help you increase your profitability and how much money you make. It's the Trade Genius newsletter. We put the newsletter out Sunday night through Thursday night, and this really looks at the plumbing of the markets and helps prepare you for the next trading day and help you make money. And we give you a lot of information. We give you market statistics, we give you market levels, we give you the seasonality, what's happening with different sectors of the market, and we will help you identify whether the market's in a bear mode or a bull mode, or whether it's euphoric, whether it's despondent, and it just puts you in a position to be on the right side of the trade. So take advantage of our offer that we have below, and you'll love it. I mean, one trade that you make with this thing can pay for definitely a month, maybe even a year's worth of service. It's that powerful. Use promo code podcast for 15% off the retail price of newsletter. Thanks for listening.
All right, Bob, why are the meat eaters in the Fed in trouble?
Well, beef prices are up 20% since 2021, and they show no signs of abating. It's kind of structural right now. That would be one thing, but chicken prices and pork prices are going the same direction. And the Fed's in trouble because there's two things the Fed can't print. They can't print oil and they can't print food. Right. And they got themselves in the middle of a supply shock here with increasing demand. And what's really interesting is that, countries like Australia would usually help ease the pain because, the country's one big feedlot, right? It's just all grass. They're going to go through a drought with El Nino this year. And so you're going to have probably a worldwide shortage of beef going into 2024. So I would say run out and get some beef, but prices are already jumping. I mean, things that were $4.95 and $3.95 a pound are now close to $6 and $7. We've seen it double at the grocery store here in the last 4 to 5 months, Phil.
We're looking at this live cattle price chart and 40 plus 45%, and you're telling us that we're going to have another wave of higher cattle prices going into the next year. And I think part of that could be why the market finally digested higher for longer, because the Fed, right, has just been pounding that home. The Fed future funds, or the Fed funds futures, have not been accepting that, saying that, they're going to cut next year, and then I think we saw finally this week they finally just threw in the towel on that idea, and the Fed is getting their way. The other thing, I guess, we got core PCE this week too, Bob, on believe it's Thursday, right? And that's been a key metric that it's been over the unemployment rate, which is very abnormal. Usually unemployment is higher than core PCE. So that tells you that inflation is a massive, massive issue for the Fed. And then it's not just beef too, right? I mean, there's other things. Orange juice, we can show them the orange juice chart. It's just been going crazy because the yields in oranges have not been that great. I mean, look at that. Just, it looks like a Bitcoin chart going into its parabolic bull run. But, and not just cattle too, right, Bob? I think you had another chart here where it was overall just meats in general are all starting to perk up. And what you're telling us is that we don't really have a lot of relief in 2024.
No, here's the problem. Even though I think some grain prices have been coming down, it's just that there's not enough people to work the farms. There's not enough people to work the processing plants. Fuel prices are rising, and now you have a shortage of animals. Mm-hmm. And so, the whole thing is just set up for a perfect storm going into 2024. And, and talking about energy, I think we may get our reprieve here for a couple of weeks in energy, but some of the data that I've been reading is that it's just going to be a pause. And then we may just blast right through that seasonality too. So it's really kind of scary because the Fed does have to stop, or they're going to take the banks out completely. We'll talk about that more next week. They're running out of games that they can play, and they're going to have to let inflation run higher, and it's going to be really painful for everybody.
I think they're at a point where they're going to have to capitulate on the 2% inflation target because they're killing the bond market. And should any of these institutions or large bondholders, remember, there's pension funds too, which, make no mistake, bonds and pension funds are the two markets that the Fed will do anything for. You cannot sacrifice those things. It's a major snafu politically. And you're going to probably see them capitulate, maybe say transition to a 3% inflation target, because you're going to have things like the bank window, BTFP, which is the bank term funding window. What does that do? That lets them take all of those underwater bonds, and it's trillions of dollars, guys, trillions with a T of bonds underwater across pension funds, across banks. So what happens when they allow them to tap those special funding windows? Well, it drives up the markets. And if it drives up the markets, it drives up inflation. So we got a really important core PCE inflation number coming this week. We'll talk about it more. But I think, Bob, they're backed into a corner, and ultimately it's going to be the inflation that wins out.
Yeah, I think the cake is baked at this point. You know, it's funny. I was talking to somebody else. I was doing an interview with a gentleman, and basically when people's psychic money goes away, that's the money they like to spend versus have to spend. People get miserable if all they're doing is working to survive.
Yeah.
And I think it's just going to make people really, really surly. Costs more to get to work. You know, it costs more to eat. You can't eat what you want. You know, you can't go on vacation. You can't do the things you like. And for the United States, it's particularly dangerous because so much of our economy is built around what I would call non-essential service work. You know, things that you like to do versus you must do.
Right.
And I think that that's going to cause another fundamental shift in our economy that is going to take a while to sort out. And so 2024, it's going to be a year we may want to skip.
It might be a year of staycations. What do you long in staycation season? I think you long basketballs, volleyball nets, tennis rackets, video games, and TLT. That's right. All right, guys. Well, let us know what you think. We'd love to hear what you guys are seeing in your neck of the woods. As always, smash that like button and subscribe if you haven't already, and set that notification bell to all. It really helps us out. Also, check out our newsletter and our specials over at tradegenius.co. We'd love to help you navigate these markets week in and week out. Thanks, Bob. Thanks, guys. We'll see you on the next video. Take care.